All right, so today we're diving deep into Zensar Technologies,
Limited
the
technology.
IT services company,
Yeah,
and we've got a really interesting collection of their documents.
we do.
I've got earnings call transcripts going all the way back to their 2015 annual report and
Wow.
bringing us right up to early 2025.
That's right.
So,
Quite a lot to cover.
yeah, our mission is to really extract the key insights about their performance,
Yeah.
their strategic direction,
Mm,
and what their communications tell us about where they're going in the future.
right. And we want to make sure that it's digestible for you.
Absolutely.
We don't want to bore you with all the
Yeah.
details.
No, no, no.
But we do want to give you a clear and concise understanding of what matters.
Exactly.
So we're going to be looking at a whole bunch of different things.
Yep.
Their financial health,
Uh-huh.
identifying what their growth engines are,
Yes.
some of the challenges they're facing.
Right.
Notably, the recent impact of what they're calling furloughs.
And then some of their strategic advancements in, exciting domains like AI.
Exciting areas.
And-
Yeah, and, it's important to consider
Yes.
the different types of sources we have.
Yes.
We have these very formal, financial reports that
Yeah.
can be a little bit dense sometimes.
Yeah.
But then we also have these really interesting earnings call transcripts
Right.
where, company leadership is talking about their performance
Yeah.
and they're directly answering questions from analysts.
Right.
So we get these kind of different viewpoints on the same data.
Okay, well, let's jump into it.
Yeah.
And let's start with their financial performance
Okay.
and those all-important profit margin.
Profit margins, yes.
One thing that really stood out to me is this consistent discussion in their more recent earnings calls
Uh-huh.
from like late 2023 into early 2024.
Okay.
This goal they have of achieving mid-teens for their EBITDA margins.
Mid-teens.
And they've actually reached that level
Yeah.
in some recent quarters. Like, for instance, in the second quarter of their fiscal year 2024,
Okay.
they reported a normalized margin income of 17.8%.
So they've hit it.
Yeah.
Good for them.
It's pretty impressive.
Yeah.
So what's really fascinating here is to kind of dig into the factors that are driving those margin improvements.
Sure.
If we go back to a May 2023 earnings call, which covered the fourth quarter of their fiscal year 2023,
Oh, okay.
they actually specifically highlighted a few things.
Right.
They talked about a favorable impact from currency exchange rates.
So currency's helping them.
Yeah. A better mix in terms of the types of projects they're taking on,
Uh-huh.
and then various operational efficiencies.
Okay, so let's unpack those efficiencies a little bit.
Yeah, so these efficiencies include things like optimizing their spending on subcontractors,
Okay.
getting greater productivity from their existing workforce,
Right.
and improved utilization rates.
And of course, that's partly tied to those furlough reversals
Exactly.
we were talking about.
Now, of course, it's never all sunshine and roses, right?
Of course not. No.
In that same May 2023 call, they acknowledged some factors that were partially offsetting these margin gains,
Okay.
so preventing the margins from going even higher.
Uh-huh.
And specifically, they noted rising SG&A costs.
SG&A now for our listeners, that's selling general and administrative expenses.
Exactly.
Okay.
And part of that increase was actually due to the reversal of a one-time benefit they had in the previous quarter.
I see.
Now,
Yeah.
they also use a really interesting phrase.
We did.
They talk about this idea of pass-through revenue decline
Yes, through revenue decline.
as being a reflection of this margin improvement.
Oh, okay.
So for our learner,
Yeah, for someone who's maybe not familiar with that term,
yeah, what does that actually mean?
what does that tell us?
So essentially, pass-through revenue is often
Yeah.
referring to revenue,
Mm-hmm.
where the company is basically acting as a middleman
Okay.
for costs that are billed directly to the client,
Right.
without a significant markup or profit for Zensar.
Okay, I got it.
So, think of things like, travel expenses,
Travel.
or maybe the cost of some specific hardware.
Okay, yeah. So if this type of revenue decreases,
Right.
while their overall revenue stays the same or even grows,
Right.
that actually leads to a better profit margin.
Exactly.
Okay.
So that decline they mentioned is actually a good thing.
It's a sign.
It's a sign of improved profitability.
Got it.
Now, our learners are probably thinking about,
Yeah.
that
Yeah.
classic trade-off between stability
Right.
and growth.
The growth versus stability question
Right.
every company faces.
And it seems that Zensar is signaling
They are.
a willingness to reinvest
Yes.
in strengthening their capabilities,
Mhm.
particularly in areas like upskilling employees in AI
Yeah.
and increasing their investment in sales and marketing.
Right.
So connecting this to the bigger picture, these types of investments,
Yeah.
while they're essential for long-term growth,
Right.
they might actually moderate their profit margins in the short term.
They might.
So it's this balancing act, right?
It is.
They're basically saying we might accept
Yeah.
slightly lower margins now
Yeah.
to really fuel that future expansion and competitiveness,
Makes sense.
and to give a clearer sense of what they consider a sustainable level.
Okay.
They've actually given a target range for their EBITDA margins
Right.
of 14 to 16%.
14 to 16.
And this came up in those later earnings calls from late 2023 and early 2024,
I see.
signaling that that's the range they're aiming for.
So this is the range they want to be in consistently.
Right.
Okay.
So it's really interesting to think about, right?
It is.
A company aiming for mid-teens margins,
Yeah.
while at the same time talking about all this reinvestment,
Yes.
it shows a certain level of confidence
Absolutely.
in their ability to,
Yeah.
drive those operational efficiencies, but also secure those higher value projects
Right.
that can support both healthy profitability and sustained growth.
It's a delicate balance,
It is.
but it sounds like they're
Yeah.
striking it.
Now let's talk about where that growth is expected to come from.
Okay.
Let's talk demand and their key industry verticals.
Demand the growth verticals, all right.
Back in May 2023,
Yeah.
alongside those positive margin numbers,
Uh-huh.
there was some commentary about soft demand,
Okay.
which I think is a good reminder that,
Yeah.
Strong financial results don't always mean
Right.
that demand is booming across the board.
Not at all.
One of the things that's particularly interesting is this high-tech sector.
High tech.
They categorize it as telecommunication, media, and technology, or TMT.
TMT. Okay. And
So we saw growth
yeah, we saw growth in that sector in that May 2023 report.
in that report.
But then things change, don't they?
They do.
By January and February of 2025,
Uh-huh.
we start seeing these reports indicating a decline
A decline in that same sector,
in that same high-tech sector.
in the TMT.
Yeah.
Wow, okay. And the company actually explicitly articulated a strategy of de-risking
Same risky.
from this area
Interesting.
due to that sequential decline.
So it sounds like they're really trying to adjust the changing winds in the market.
It highlights the dynamic nature of the IT services market, right?
Absolutely.
This constant need to adapt,
Yeah.
but it's not a uniform picture of decline.
It's not.
If we look at April 2024,
Okay.
when they reported their results for the fourth quarter of their fiscal year 2024,
All right.
they actually showed sequential growth
Growth.
across all of their industry verticals,
All of them.
including banking and financial services,
Wow.
manufacturing and consumer services,
Okay.
healthcare.
Interesting.
So it's really that broad-based growth.
Yeah, that broad growth is really a bright spot
Yeah.
in that report. And they specifically mentioned
Yeah.
seeing sequential growth in TMT
Right.
in that same April 2024 earnings call, highlighting that it was the first time they had seen growth in 4 to 5 quarters,
Right.
attributing it to some new client wins.
Yeah,
So it looked like a potential turnaround
it did.
for that sector.
And then we get these reports from early 2025 showing the decline.
Yeah, the decline in TMT again.
Yeah. So things can change rapidly.
Things can change quickly.
But one sector that is showing strength
Yes.
is healthcare and life sciences.
That's right.
In that February 2025 report, they showed a really impressive sequential growth of 8.8%
8.8%.
and a year-over-year increase of 13.3%
So that is
in that area.
a strong area for growth.
So healthcare and life sciences are looking like a really
It seems like
key growth driver for
a
Zensar.
really bright spot.
And it seems that they're very aware
They are.
of the evolving skills
Right.
that are needed to deliver value to their clients. They specifically emphasize this focus on what they call techno-functional skills.
Techno-functional.
Back in October 2023.
Right. So this is that combination of, you know.
Yeah, that crucial combination
Yeah.
of technical expertise
Yes.
and deep understanding of specific industry.
Of specific industries. Yeah.
So it's not just about having, highly skilled coders or data scientists.
That's just that.
It's increasingly about having people
Right.
who really understand the intricacies
Yeah.
of their clients' businesses,
Yeah.
whether that's healthcare,
It's
finance.
that factoring.
That in-depth domain expertise
Yeah.
becomes a huge competitive advantage.
Absolutely.
Now let's shift gears and talk a little bit about their client relationships.
Client relationships. Okay.
There was this mention in both May 2023 and April 2024,
Mm-hmm.
this intention to reduce their dependence on their largest clients,
Yeah.
which, is a pretty common
It's a common strategy.
and prudent strategy
Yeah.
to ensure a more diversified and stable revenue base.
You don't want to have all your eggs in one basket. Right.
Now, they don't give us specific numbers
Yeah.
on the growth of individual top clients.
Which makes sense, for competitive reasons.
Okay.
They don't want to give away too much information.
But this emphasis on broader client diversification
Yes.
and achieving growth within their top 5 and top 10 client lists
Mm-hmm.
signals a real deliberate effort
It does.
in this direction.
Yeah.
Interestingly, they also highlight
They do.
achieving their highest client satisfaction score
That's huge.
in April 2024,
It is.
which is a really important metric.
Yeah, it's not just about getting new clients.
Right.
It's about keeping the ones you have happy.
Exactly.
Right.
And then further evidence of this successful client engagement
Yes.
comes from the increasing number
Mm-hmm.
of what they call their $20 million plus clients.
20 million plus. Okay.
As of January 2025, they're reporting a growing number
Mm-hmm.
of these higher value engagements,
I see. So they're
which suggests
yeah.
they're effectively expanding their relationships with key clients
Right.
and focusing on those larger
Yeah.
strategic projects.
What should you do?
And then finally, on the client front,
Yeah.
they report a really strong order book
Oh, that's good.
in late 2023
Yeah.
and early 2024.
A strong order book is a good sign.
Yeah, we're talking figures like $194 million
Wow.
and $167 million in consecutive quarters.
Oh, that's...
So this is a crucial leading indicator of
Yes.
future revenue.
Yeah, it tells you what's coming down the pike.
Right, and it suggests a healthy pipeline of new deals
Uh-huh.
compared to the previous year.
So they're...
So a strong order book like that
Yeah.
gives you a certain degree of confidence
Absolutely.
in their near-term financial outlook.
Yeah, it shows that they have the work lined up
Right.
to generate revenue in the future.
And the fact that it's stable to better
Yeah,
compared to the previous year
right.
is also a good sign of momentum.
Momentum, absolutely.
Now let's dig into how they're actually managing their operations
Okay.
and their people.
Operations and human capital.
There's this consistent focus
Yes.
in late 2023 and early 2024.
Honorable way.
Several key drivers of operational efficiency.
Right, let's hear it.
So they talk about what they call pyramid optimization,
Pyramid optimization.
which is basically about
Okay, sorry.
structuring their project teams
Okay.
with the right balance of junior and senior staff
Right.
to maximize cost effectiveness and efficiency.
So getting the mix right.
Right.
Okay, yeah.
They also talk about managing utilization,
Utilization.
which is making sure their billable employees
Right.
are actively working on client projects,
Okay.
calibrated usage of subcontractors.
It's a contractor, yeah.
So really managing when and how they're using those external resources. And then they also talk about managing their on-site mix.
On-site make. So that's the balance
Yeah.
between employees who are working at the client's location
Right.
versus those who are remote or offshore.
Exactly.
Well,
And these efforts seem to be paying off.
it seems...
They actually quantified some of their utilization improvements,
Uh-huh.
noting a pretty significant 310 basis points higher utilization
310 basis points.
year over year
Wow, that's a big jump.
in the third quarter of their fiscal year 2024,
Okay.
which for context, that's an increase of 3.1 percentage points.
So they're getting more out of their workforce.
Exactly.
Okay.
So it's not just about efficiency.
Right.
It's also about what they call accelerated fulfillment,
Accelerated performance.
which is about quickly getting the right talent assigned to new projects.
Yeah, speed is key.
And then this idea of capability enrichment,
Capability enrichment.
which is all about the continuous development and upskilling of their workforce.
So they're not just hiring people.
Right.
They're investing in their existing employees.
Exactly.
Okay.
So that capability enrichment includes some really interesting things,
Like what?
like these proactive multi-skilling initiatives.
Okay.
And what I thought was particularly cool is their investment in an AI academy
An AI academy.
to cultivate skills in cutting-edge areas like generative AI.
Generative AI.
So and they actually give a concrete example
Oh, cool.
of using these new skills to create a solution for a legal services client,
Okay.
which led to a really significant reduction in processing time.
So it's not just theoretical, they're actually applying it.
It's really cool to see how these abstract concepts of AI
Yeah.
are actually translating into real-world benefits
Real world benefits for clients.
for their clients.
That's great.
And it's not just about technical skills.
Right.
Zensar really emphasizes
They do.
developing training and retaining a diverse and inclusive workforce.
Diversity and inclusion.
Their 2019-20 annual report even mentioned that they received some pretty prestigious awards for their HR policies.
Okay, so they're being recognized for
Yeah.
their efforts in that area.
Exactly.
Good for them.
So it really underscores their commitment to their employees.
Yeah, and in a talent-driven industry like this, that's really important.
Oh, absolutely.
You need to have a motivated workforce
Right.
to deliver quality service.
We also see some positive trends in their attrition rates.
Attrition.
By April 2024, their last 12 months, or LTM attrition rate, had improved.
Okay.
It decreased to 10.9% from 12%.
That's trending in the right direction.
Exactly.
That's good.
So they're getting better at keeping their employees.
Which is good for the company.
Right. Lower attrition means,
Less
well,
cost
yeah.
associated with recruiting and training.
Exactly.
Yeah.
And while they don't go into a ton of detail,
Okay.
they do mention various employee engagement initiatives,
Right.
all part of cultivating that positive and productive
Right.
work environment.
Happy employees are productive employees.
Now let's talk about the elephant in the room.
Okay. Elephant in the room.
Those furloughs,
Furloughs.
which
Yes.
have had a noticeable impact on their performance. Now, for our listener who might not be familiar,
Yeah.
furloughs essentially involve a temporary leave of absence for employees.
Yeah. So it's not a layoff.
Right.
It's a temporary thing.
It's a temporary measure.
Okay.
And in Zensar's case,
Yeah.
these furloughs have particularly impacted their revenue,
Mm-hmm.
especially in that high-tech sector,
High tech again.
and their application services division.
Okay.
We saw this in late 2023 and early 2024.
So why would a company do this? Why would they furlough employees?
Well, given the cyclical nature of some of these industries
Mm-hmm.
and the broader economic climate,
Right.
furloughs can be a way for companies to kind of manage their workforce
Okay.
in response to fluctuations in client demand.
So it's a way to adjust to
Yeah.
changing conditions.
Exactly.
Okay.
Now, they haven't given us specific figures
No.
to quantify the exact impact of these furloughs,
Okay.
but they have said
Yeah.
that they expect some of these furloughs to be reversed in the near term,
Okay.
but also that some level of impact is likely to continue in certain sectors,
Right. So furloughs have been a bit of a headwind, especially in the high-tech area.
particularly in high tech.
But the company's managing it
Yeah.
by focusing on other growth opportunities.
Right.
And being efficient.
Exactly.
Okay.
Now let's talk about their strategic priorities
Strategic priorities are...
and where they're focusing their efforts for the future.
Yeah, the future of Zensar.
One thing that comes up again and again
Uh-huh.
in all these reports
Okay.
is their emphasis on digital transformation,
Digital transformation.
experience design,
Uh-huh.
data engineering,
Okay.
and advanced analytics.
Those are...
These are clearly the core of their service offerings.
Yeah, the core of what they do.
To strengthen these offerings,
Wow.
they've also highlighted some key partnerships and alliances
Okay.
with some big names in the industry.
Like who?
For example, they mentioned being Oracle Platinum partners.
Oracle.
So it really underscores their
Yeah.
strong relationships with major technology platforms.
Strong relationships are important.
They're also investing in new and emerging tech areas
Right.
like AI, generative AI,
Generative AI, yes.
and developing domain-specific solutions.
Okay.
So they're really paying attention to what's coming next.
They're not just standing still.
Right.
They're looking ahead.
It's good to see that forward-thinking approach.
Yeah, they recognize that things are changing,
Right.
and they need to stay ahead of the curve.
They even have this initiative called Zen Labs,
Zen Labs.
which is dedicated to exploring transformative technologies like blockchain,
Blockchain.
and they've developed their own platform
Okay.
called Zen Smart Blocks within that space.
Zen Smart Blocks. So they're really...
So it's early days.
Yeah.
But it shows that they're not just reacting to current trends.
Right.
They're actively looking for those disruptive technologies.
Yeah. They're trying to be the disruptors.
What kind of impact could something like that have for Zensar down the line?
Well, it shows that they're committed to innovation
Mm-hmm.
beyond just, their current services. They're looking at these potentially game-changing technologies
Yeah.
that could open up whole new opportunities for them.
Exactly.
And potentially new revenue streams.
And finally, in terms of their strategy,
Yeah.
they've emphasized the importance of co-innovation projects with their client,
Co-innovation.
which, is this,
For working closely with the client.
yeah, this collaborative
Yeah.
approach.
Yeah.
And, combined with,
Mhm.
effective management of their intellectual
For
property,
intellectual property, yes.
seems to be a key element of their strategy.
So co-innovation is a smart move
Yeah.
because it keeps them aligned with their clients' needs.
Exactly.
And they're developing solutions together.
Right.
And of course, protecting their intellectual property is essential
Yeah,
if they want to profit from those innovations.
exactly. Now,
Okay.
broadening our perspective a little bit,
Yep.
let's briefly touch on their sustainability
Sustainability,
and corporate social responsibility initiatives.
corporate social responsibility, or CSR.
They've got a clear commitment to CSR,
They do.
focusing on community development,
Okay.
employability enhancement,
Uh-huh.
and environmental sustainability.
The 3 pillars.
And it goes beyond just words.
Yeah.
They provide details in their reports
They do.
of specific eco-friendly initiatives
Like what?
at their campuses.
Okay.
Things like rooftop solar power generation,
Solar power.
sewage treatment plants for water recycling,
Wow.
and even sensor-equipped water caps
Okay, so they're really thinking about
to minimize water waste.
reducing their environmental impact.
Their Pune campus
Mm-hmm.
seems to be a real leader in this area,
Okay.
with a significant amount of green space.
So they're walking the walk.
Yeah, they've even gotten certifications,
Okay.
like the IGBC Green Interiors Platinum for their Pune and Bengaluru SEZ offices,
Wow.
recognizing their commitment to creating those sustainable work environments.
That's great.
And looking even further ahead, they've set a goal of achieving net zero emissions
Net zero.
for their Scope 1 and Scope 2 emissions
Okay.
by 2040,
2040.
which, shows a real long-term commitment
A long-term commitment.
to environmental stewardship.
That's impressive.
They also specifically highlighted their water conservation efforts
Uh-huh.
and the wastewater management system at their Pune campus.
Okay, so they're not just talking about it.
Right.
They're doing it.
They're giving concrete examples
Yeah.
of the actions they're taking.
Good for them.
So it's clear that sustainability and CSR
Yeah.
aren't just, side projects.
Right.
They're integrated into their core business philosophy.
You're their DNA.
Exactly.
Wow.
All right, learner.
Yeah.
Let's wrap this up
And summarize.
based on this deep dive
Yeah.
into Zensar's documents
Mm-hmm.
from 2015 to early 2025.
A long period.
What are the key takeaways?
Well, I think the main thing is that Zensar is operating in a really complex environment, but they're staying focused on profitability. Mm-hmm.
As we saw with those EBITDA margins,
Right?
they're also investing in future growth areas.
Yes.
Like AI and healthcare and life sciences.
Healthcare in particular seems to be a bright spot.
Yeah, that growth in healthcare is really significant.
And it shows they're successfully pivoting
Yeah.
to capitalize on the demand in that sector.
Yeah,
Now, the high-tech sector has been a challenge,
it has.
but they're addressing it
Yeah.
through that strategic diversification
De-risking.
and de-risking approach.
Right.
And importantly, they're seeing positive momentum in other verticals,
Yeah.
and they've got that healthy order book.
Which is really good for their future revenue
Exactly.
and that focus on operational efficiency.
Operational efficiency.
And strategic project selection
Yeah.
is really paying off.
It is. It's helping them maintain those margins.
Exactly.
Even when demand fluctuates.
So their commitment to things like
Yes.
workforce,
Yeah.
utilization,
Digitalization.
contractor management,
Yeah.
and then the talent development piece
Mm-hmm.
with that AI Academy
AI Academy.
seems to be a big part of their resilience.
It's all connected.
So here's something to think about.
Okay.
Given Zensar's investments in AI
AI.
and their focus on developing that deep domain expertise,
Deep domain expertise.
what kind of disruptions or opportunities
Yeah.
might we see for Zensar
Yeah, what's next for them?
and the broader IT services landscape?
And how will their clients change as